Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, as per the title of this video, I'm going to be going through some potentially terrible Bitcoin news with a Bitcoin signal that's only really happened twice in the last 13 years. I'm also going to show you a Bitcoin signal in the charts also that could save the Bitcoin downtrend to give us some hope as well. I'll also go through the detailed analysis of the 60-day cycle in the light of what's been happening with the Bitcoin bearish price action. And many people in the comments do ask me about exactly what I will be doing. So I'll share with you my thoughts of what I'm thinking about dealing with this uncertainty that we have currently. So if that sounds interesting, without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So before I go into the meat of the video, I just want to explain a little bit in detail and emphasize certain points about what I mean by doing your wider research before you make any long-term investment decisions or decisions to do some swing trades. And this applies to the Bitcoin miners in my private members club as well. Please remember, I'm not anybody's financial advisor. I'm not qualified for that. And in all my videos, including the Bitcoin Miners Club, where I share my long-term investments as well as my swing trades, that is exactly what I'm doing. I'm just sharing what I am doing. They're not a recommendation for you to do the same. And oftentimes I do say that doing the swing trades is a very risky business. And this is why I always ask everyone politely to do your wider research, because I can't be 100% right. That's simply not possible. So by doing your wider research, what you're doing is you're acquiring the best available information from your own research from which to take your decisions to either trade or not to trade. And if you do trade, then you have to take responsibility and own that decision. It's your money, and no one can put a gun to your head to make you do any investments or any swing trades with it. Okay, so I hope I've made myself very clear. Please always do your wider research before you make any decisions with your money. So what is the terrible news in the charts? Well, it goes back to what I covered in the last couple of weeks, and that was that the Gaussian channel, which was showing a bullish trend, has suddenly turned into a bearish signal, unfortunately, here. And that is that if we look on the weekly chart, if we go back here, that once we have a bear market, we have this green channel followed by the red channel. And once the price action goes above the Gaussian channel here, that's usually a start for a run up to the end of the bull market. So this is what happened right at the beginning. It happened one more time down here at the end of the 2013 bull market. We went from the green channel here to the red channel. Once the price got above the Gaussian channel, we had a run up to the end of the bull market. And that sequence was broken because of the COVID situation over here. Because once we'd reached the end of the bear market in 2019, we went above the channel here in the same sequence, but failed to actually keep above it before the end of that bull market in 2021. So that break in the chart, the first time it happened was back in 2019 in the COVID situation here that developed. So what's happened over here is only the second time this has happened, whereby we've bottomed out, gone into the red channel, got into the green channel, as you can see there, which I showed you last week. But let's have a close look at what's just happened. So having gone from the red channel of the Gaussian here into the green segment, which is what exactly happens at the beginning of the bull market, usually the price doesn't fall back below this line here. So what's happened is that last week we had this candle that actually closed within the Gaussian channel. But for confirmation of that, we needed a candle that actually opened and closed within this channel, and that's exactly what's happened this week. So yesterday's close meant that for the first time since the 2020 COVID situation, we've actually gone into the Gaussian channel with an open and close of the weekly candle. And the problem with that is that once we do fall into this, we tend to spend a lot of time within it. Of course, we can still bounce back up here and I'll show you a signal that may well allow it to do that. But history tells us that once the price goes into the Gaussian channel, it tends to spend a lot of time in there. For example, when we first got into this Gaussian channel back in 2011 here, we spent around about 43 weeks within this channel before we broke out over here. The second time we broke into this channel was down here, and from there it took us up to this point here, which was around about 65 weeks to get back up above that channel. And the third time we got into this channel was in 2018, and again there it actually took us up to this point here, which is around about 50 weeks, 52 weeks here. And in the COVID situation, once we entered in there, it took us all the way up to this point here when we broke back above it, around 35 weeks. So this is the problem that we've got here, that what we really need is some immediate action from the Bitcoin price, from the bulls, to take us back above this Gaussian line, because generally this is a signal that is very bearish. And we'll just have to see how it plays out, but that's the historical context of what's happened with the Gaussian channel over the last 13 years. And we really need to pay attention to that. So what is the Bitcoin signal in the charts that could actually save Bitcoin from this downtrend or the potential bigger fall in the market? What I'm talking about here is the hidden bullish divergence that's appearing on the Bitcoin chart. What is a hidden bullish divergence, you may ask? Well, here it is. A hidden bullish divergence happens when the price is making a higher low, but the oscillator, in our case the RSI, is showing a lower low. And here it is here. The price is making a higher low and the RSI, the oscillator, is making a lower low. So as you can see on the weekly chart for Bitcoin, we're making a higher low on the price action and making a lower low on the RSI here. And if we have a look at the monthly chart, we can see exactly the same happening here. A higher low on the price and a lower low on the RSI. And if we go on to the daily chart, exactly the same is happening here. On the daily chart, we're making a higher low, and on the RSI making a lower low. Obviously, the reason why 25.2 is critical, and especially this point here, which is at 24,750, if the price should fall below that, that obviously negates this hidden bullish divergence. So this is very important, and we are really at a critical stage at the crossroads of the Bitcoin having to make a decision in terms of which direction it wants to go here. So only time will tell, but it's something we need to be aware of and pay attention to over the next coming days and weeks. So what really Bitcoin is doing is taking everyone to the edge. And the question is, can we hold our nerve? But certainly this bullish hidden divergence does give me hope in the backdrop of a very bearish price action that's been developing over the last 5 or 6 weeks. Okay, moving on to the 60-day cycle and to see exactly where we are and where we may be heading and what the price action is telling us currently. We are currently on day 74 of this 60-day cycle, so we've gone well past the 60-day point here. So the technical chart structure here is not very clean or very strong, because what we've had so far are 2 right translated cycles here, followed by a failed cycle, and followed now by a left translated cycle, which is that before the midpoint we reached the high, and since then we didn't make a higher high over here, which is what we would have expected at the start of a new bull market here. And the fact that we've actually come back down to retest this very strong inverse head and shoulders structure at the bottom of the bear market, not only once, which is really a good sign because it gives us a bounce to break to the upside. But unfortunately, when it comes back the second time, which is done recently, last week, this shows a lot of underlying weakness in the price. We just have to call it out for what it is. Obviously, we'd love to see the price go up here, but we have to respond to the price action of what's developed here. And that is that we've come back and retested a very strong level here for the second time. And in classical charting, that is a very weak point. It's showing bearish underlying trend in the price. So unless we get a very quick bounce back up to the 28,000 levels here, to the underside of that, there is a danger that this could break to the downside here. So given this stair-step structure that we got from the bottom of this bear market here, we should really have been making much higher levels on here, but instead it's actually broken down. So this is what's really concerning to me, that after the 60-day cycle time period here, instead of a bounce back up like we got over here and over here and over here, this is not followed through as we would have expected at the beginning of a new bull market. And what I'm seeing is that, as I mentioned last week, that when we got this daily candle here with a long wick at the bottom, was a possibility of an end to this 60-day cycle and the beginning of a new one, because this is what you normally get, a rejection of lower prices with a long wick at the bottom, and that usually triggers off another bounce to the upside. And since we didn't get that, but it just increases the probability that we may break to the downside below the 25,200. So it's something that we need to be aware of. But having said that, we are still at a support level, which is the 25,200. So this has provided an incredible amount of resistance here, as well as an incredible amount of support along here, and we're currently at that support level, and that is holding for the time being, and that is a positive. And what we really need is for a bounce back up to the underside over here at around about 28.5. And we must be aware that when it does come up to this level here, so keep a note of this, 28.5, we can expect very strong resistance now, because this support now becomes resistance here, and we could get a tumble back down again from there, unless the bulls can push it above there for the next leg up above the 31,000. And the rejection from a bounce here would obviously give you a new left translated cycle, which is again bearish. So what we would have got is two right translated cycles, a failed cycle, and then a second left translated cycle here. And that to me would signal a move back towards the 20,000 or even lower levels. So this is what we've got to be aware of. This price action anywhere up to about 28.5. If we do get a bounce, beware of this level here, 28.5. Because if we get rejected here, that is a very strong signal that we're going to break this for the third time down here to lower levels, to around about the $20,000 mark. Why do I say that? Well, when we look at the weekly chart and zoom out and use a Fibonacci retracement from the bottom here at 15,400 to the previous high at 31,000, it's giving us a clue as to what could possibly happen. And as we know, the Bitcoin price has a very high affinity to the 61.8. And if we have a look at where that 61.8 is currently, we can see that the 61.8 is at this level here, and that is at 20,300 down to 19,900. So call it 20,000. So this could quite easily tumble down to here before finding support. And if it does go back to the 78.6, then it goes back to this level here at the 18,300, 18,400, all the way down here. I'm not saying it's going to happen. The probability is not very high, but if we do break the 25,200 here, then this 20,000 becomes a very high probability, and possibly down to even the 18,000. And what that really means is that we may have to spend a lot more time down here consolidating before we start moving back up again. So we've already spent that time here consolidating to move to these levels, and hence our thesis and narrative that this should have been going back up. But Bitcoin doesn't do what we want it to do. It's going to do what it wants to do. And if it wants to create another structure down here, then so be it. But it just elongates the bull market by another 6 months to another year. And it also means that the long awaited first peak that we normally get at the end of the bear market and the start of a new bull market, that we got back here in 2012 and back here in 2015 and back here in 2019, and what we were expecting here in 2023, this expected first peak may not yet happen. Eventually it will just take a little bit longer. But certainly our expected peak over here, based on the historical context of the last 13 years, may take a little bit more time than would have been expected. So once again, patience is a virtue, and it's very easy to get irritated and frustrated by the whole process. So what that really means is that this long-awaited first peak may not happen in the next few weeks or months, and it may happen more nearer the halving than this side of 2023. And we can only respond to the Bitcoin price action as the price reveals itself, as the market reveals itself. And our job is to really adapt to it and not get frustrated or irritated by the changes in what's happening to the market. And it's our job really to adapt to these changing circumstances when the price doesn't do what we expect or hope. And that will avoid all the irritation and the frustration and the anger that I see in many of the comments from other YouTube channels. So what I believe is that we should always be honest with ourselves and without emotion, and incorporate emotional intelligence, whatever the price action is presenting us with. So we were expecting a price to go up to about 34, 36 initially around here, and up to even this level here where the price action is, which is now currently at 47, 48. But given this solid structure that we have actually built over the last several months, we can still be hopeful. We would have hoped to have built on that, and we can still be hopeful of breaking above the 31,000. However, we've just got to keep a concerning eye on the bigger move to the downside as well in order to give us some balance. But we do really need to see a big bounce to the upside shortly. So how am I looking at in terms of the strategy with this situation that we've got? So as I mentioned at the beginning of this video, I'm only sharing my thoughts with you. This is not a recommendation. Everybody has their own unique financial situation and everybody has to do what is comfortable for them. So I'm just sharing with you what my thoughts are with this price action as it's developed over the last many weeks. So what I'm planning to do is that if we do lose the 25,200 and we dip below it with a daily candle below the 25,200, then I would be inclined to take 50% of my long-term positions out in order to protect the further downside here. And the worry for me is cutting my positions at this level and the price doing this all the way back and getting a big bounce here. And this is quite a common occurrence with Bitcoin. It's called fading. It fades below a strong neckline and then turns back up again, which actually traps a lot of the sellers or the buyers around these levels. And the reason for 50% rather than 100% is that in order to actually cover for this fading, that if it does bounce here, I've still got 50% to ride back up again. So the idea with the 50% for me would be that if the price did do that and then came above this 26,800, which is a level I mentioned last week, then I would rejoin that 50% at this level here to ride back up above those levels again. So this is the risk I would be taking by doing that, this level here. But I would be protecting a bigger fall to the downside all the way down to 20 or even 18,000. So if we don't fall here and get a bounce now up to these levels at 28.5, I may be inclined to take 50% off there anyway, because the way the structure of the chart has been, it may be prudent for me anyway that we would find very strong resistance. And in order to protect the downside, I'd be willing to take 50% there of my long-term position. But if the price does get above it, I would rejoin this level here. So once the Bitcoin gets above the 31.5, I would rejoin with that 50% back above this level. So once again, I would be risking this amount here from about 28.5 up to 31 in order to protect a bigger fall to the downside here. So these are very uncomfortable decisions. As I say, we have to just remain neutral and face whatever the market presents us by responding in the best possible way we can on our own individual basis. So everyone has their own decision to make according to how you want to play it. And there is no one correct strategy. There's hundreds and hundreds of strategies that people play out. And I'm in a position here to just share my strategy of what my thoughts are at this current juncture. So in conclusion, what we have to really say is that we have to accept what the markets are, and they're not sometimes very favorable to what we want them to be. And conditions for investing and trading are really difficult here. And if the conditions were always favorable, then everybody would be a millionaire and making money all the time. And that's obviously not possible in this market. The main thing for me is really that the 4-year cycle, which is the one that I'm actually been looking at for the last many years, is still intact. There is nothing here when we zoom out and look at the full 13-year picture. There's nothing currently going on that tells me that this is a failed cycle overall. And what is called for is really to keep a control of our emotions. We have to turn this adversity into opportunities by picking a lower entry point should the markets fall further with the 50%. And that's what I would be potentially doing if we lose the 25,200 level. So currently we're at a crossroads and we may have some very difficult decisions to make. Okay, so this is where we're at. And before I go, I just want to mention that this Wednesday for the Bitcoin Miners Club, the video that we do once every week on a Wednesday, I will be sharing a pattern that's been developing amongst the Bitcoin miners that has been helping me to grow my long-term portfolio with virtually no risk. So what's happened is that over the last 8 or 9 months, I've been collecting data on the Bitcoin miners, which has actually highlighted a certain pattern which has emerged from that data, which tells me when to buy and when to sell. And so far, I've done about 4 trades on my long-term portfolio using this pattern in the last 5 months, and given my long-term portfolio an increase by around about the 60% mark. If you want to have a look at this pattern, so if you want to have an insight into what we do at the Bitcoin Miners Club, you can become a member by clicking on the join button below any of my videos here. So if you click the join button here, you'll get this box here where you can join the Bitcoin miners and you can have access to all the library of videos that we have done since March this year when we started this private members club. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to click the like button and to subscribe and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.